I would like to kick off by welcoming everyone to our first quarter advisor update. We're really excited to bring you up to date following last month's investment committee meeting. And the focus of that meeting, as will be the focus today, has been our work with the YourStake team to enhance the VADIS workflow, to provide all of you advisors with a better, faster, and more integrated VADIS experience. As you know, we normally begin our advisor update with our economic and markets review and outlook. We follow that with investment process and performance, proxy voting, compliance, and other topics. Today, you may have noticed that we have a special guest. Gabe Rissman, co-founder of YourStake, has joined us for this call. So we are going to kick off with a discussion of our recent VADIS enhancements. Gabe is going to do a demo of those enhancements, and then I'll turn over to Caitlin to discuss proxy voting, and Kathy to cover compliance, and we'll get to the economic and markets review if time permits. So if we don't get to those things, please take a look at the investment committee notes that you should all have received. We'll also send them out with these slides, which toward the end contain the economic and markets slides, so that you'll have all that information. So you've all seen this slide before. At First Affirmative, our goal is singular. We produce and deliver values-aligned solutions to enable our clients to achieve their financial and impact goals. For more than 30 years, First Affirmative has been innovatively and authentically leading the way in sustainable, responsible, and impact investing. And to us, authentic, values-aligned investing means that we are looking to integrate clients' values and their financial objectives into our portfolios. To do that, we have been delivering innovative solutions for an extended period of time. Today, we're going to be talking about the latest of those innovations, and we're very fortunate to have the team at YourStake as partners in this. So again, we are going to talk about the enhancements that we've made to our values-aligned direct index solution. And our goal since we introduced VADIS has been to work continuously to improve and simplify advisor interactions with their clients and prospects and our interactions with advisors, and also to continuously enhance the quality and performance of the portfolios we deliver. The next generation of VADIS technology does exactly that. It incorporates upgraded analytical tools, the YourStake optimizer, which we worked on jointly, and the artificial intelligence-driven advisor core platform. It features a VADIS-specific questionnaire, the YourStake optimizer, and advisor core portfolio analysis. The VADIS-specific questionnaire is particularly important because if you start with that questionnaire, which you can launch from the VADIS workflow, even if your client's values align with every category and all of those 35 plus metrics are applied, the metric meter will not be read. So that questionnaire is extremely important for you to use as you sort of kick off the VADIS process with your clients. That combined with the analysis Rich will present next will enable you to review your client's impact preferences for potential issues that might impact the structural integrity of your client's VADIS portfolios before you submit those portfolios to us. So it's our responsibility to inform an advisor when a category is likely to have a negative impact on the portfolio structure, because that could hurt financial performance going forward. We have reestablished the metric meter and a pre-submission warning, which I'll show you in a minute, to allow you to do this before you submit that VADIS workflow to First Affirmative. Most recently, as many of you know from the email we sent out and from the comments we've been posting to Salesforce cases, most recently we introduced the YourStake optimizer. The YourStake optimizer is the result of extensive testing and documentation, which we have now concluded. We are confident that optimizer can deliver high quality, structurally sound, values aligned direct index solutions. We've started using that optimizer for tax deferred accounts and taxable accounts that do not require sophisticated tax and transition management. Those taxable accounts are generally less than $250,000. So for a taxable account that's $250,000 or more, generally a Schwab account, we will continue using the Northfield optimizer and the Astro platform, which is what we have been doing. With the YourStake optimizer, because we were able to set constraints, it allows us to deliver structurally sound portfolios with market capitalization and geographic allocations that are very closely aligned to the benchmark. It also allows us to deliver portfolios with low tracking errors across all risk levels. Finally, we've moved toward the advisor core portfolio analysis. It is a better quality and presentation of post-optimization reports. We've moved on from the Morningstar reports that we have been providing to advisors. We believe this is an elegant solution, an elegant report style, and it will enable you to quickly compare the optimal VADIS portfolio to the benchmark, and if you'd like, to an existing client portfolio in presentation format. And Gabe will also show this. The following things are not changing in the VADIS process. Number one, First Affirmative oversight, review, and fiduciary responsibilities will not change. Number two, how advisors progress through the VADIS workflow will not change. As you always do, as always, the optimization, portfolio review, and report delivery process will be initiated after you progress through the VADIS workflow. And finally, the optimization process for large taxable accounts will not change. As we moved forward in our continuous improvement process, we've analyzed each piece of the VADIS process. And with this in mind, Rich created a document that looks at the VADIS universe from the perspective of each of the YourStake metrics. It's called the Book of VADIS, and he will introduce this to you.
Okay, thank you, Teresa. Hi, everybody. I hope you're all having a great day. So, the Book of VADIS is meant to be a compilation of all of our combined knowledge on VADIS and what we've done so far with it, from process instructions to analyzing the universe down to every possible metric that we could analyze it to. So the Book of VADIS is a spreadsheet that assesses the VADIS universe from the perspectives of each YourStake values metric, and it also can be applied to any client-specific universe we may have. It allows us to analyze the impact of the 156 YourStake impact preferences on the client-specific investment universe, including every aspect of metric and VADIS universe assessment that we could possibly think of. I mean, there's probably more, but we're going to figure those out. The most significant advance in the document is the analysis of the VADIS universe through the lens of each screen, and it allows us to see the impact of individual metrics and or client screen sets on the overall market capitalization of the universe. So we can see exactly what's being removed now from the universe when a singular screen is set or multiple screens is set. And that is the purpose of the 11 sheet, hundreds of page document that is the Book of VADIS. Teresa, can we go to the next slide? So this is my favorite part of the Book of VADIS. This is what allows us to analyze the VADIS universe based on every little piece of it, from market cap analysis to exactly how much value is removed from the universe when someone selects a specific screen. So what we have here is what happens when someone submits a red metric meter. You can see that 71% of the mega cap was removed and 60% of the large cap, and over 2/3 of the universe's total AUM or value was removed. This is huge because it allows us to actually illustrate what we've been trying to say for months now, and that certain metrics are dangerous financially for a client. And that is what we're trying to show here. Now we can apply this to any client-specific investment universe. If someone is curious about why they might have a SMID bias in their universe, we can easily show them now. We can also show exactly, again, how much value is removed from the universe. And when it's 2/3 of the value of the entire universe, it's pretty astonishing what the ultimate portfolio looks like. It contains nothing that you'd think would be there. So with that in mind, I'm going to pass it back to Teresa, who is going to discuss the metric meters next.
Okay, so what you're looking at is on the left side of the screen, the metric meter. You can see that it's red. You can also see that there were only 7 screens chosen. I chose these screens knowing that they would create a red metric meter. So this screen set is called Teresa Warning. So these screens I knew would cause a red or result in a red metric meter. And as Rich said, it's important that you deliver value sets with green metric meters to ensure that we can deliver a structurally sound portfolio with low tracking error. As the metric meter moves from green to red to yellow, or across the top of the metric meter from left to right, it becomes increasingly difficult because the values that the client selected may eliminate, as Rich said, a large portion of the investable universe, potentially increasing the risk from individual stock performance. And that could lead to short-term fluctuations in the performance of the portfolio compared to the chosen benchmark. To avoid this, we added, as you can see on the right side of my screen, a warning. Before you submit a portfolio with a red metric meter, or a yellow metric meter, in fact, You are going to get a warning that says, and I know you probably can't read it on my screen, so I'm going to read it out loud. Warning, you are about to submit a portfolio with a red, again, or yellow metric meter. This means the values you've selected will eliminate a large portion of the investable universe, potentially leading to a portfolio that may have different composition characteristics from the benchmark. E.g., some holdings may have substantially different weights than the benchmark. To increase the size of the investable universe, you can remove some values from your selection using the Values tab in this workflow. Please contact service@firstaffirmative.com with any questions. So that is what the warning will say before you are able to submit a portfolio that has a red metric meter. You'll still be able to submit it, but it will almost force you to acknowledge that you're doing that. And then we are going to be adding IPS language that allows the client to also acknowledge that they're submitting a red metric meter and it may have an impact on the portfolio. So,
Teresa, may I interrupt for just 1 second?
yes.
Okay. First Affirmative is first and foremost a fiduciary to client accounts. And as such, we have to make sure that everyone is aware that too many value sets can affect the final account. And so this is a very important issue.
And I would like to also say, and Gabe might say this as well, this doesn't mean that you can't apply a lot of screens. There are just certain ones where you are removing such a large swath of the investable universe, animal exploitation being, key among them. You're eliminating a large portion of the investable universe. There are alternatives. There are, in fact, in the animal category, there are many alternatives to that. And the fact is, if you want to include that screen in your value set, you can. It will just limit what you can include around it. So we're not saying don't do this or don't do that. What we're saying is the combination should allow you to submit a metric meter that is green or at worst yellow.
Hey, Teresa, may I interject for just a second?
Sure.
Just to add on to that, 5 of these 7 metrics are difficult metrics: CEO pay, migrant detention, involvement, animal exploitation, and both the digital rights freedom of expression scores, or digital rights governance score as well. And we've seen sets of 35 screens at this point that wasn't red.
Mm-hmm.
And then we'll see something like this where we have 7 screens and it's red because those metrics are dangerous. And we're trying to relay that to you guys.
Exactly. Okay, so now that we've covered the metric meter and the warning, I'll let Gabe talk about the really exciting things, the next generation technology that we now have built into VADIS. And Gabe, I'll stop sharing my screen and you can share yours.
Awesome. So even before I dive into the screen share, I'll just kind of share some of the motivation for why we built the optimization capabilities that we did. As you know, with high number of metrics selected and red metric meters, a lot of times the first thing that gets impacted is the deviation in geographical exposure or deviation in market cap relative to the benchmark. And being able to have more flexibility to constrain market cap, constrain international versus US exposure, and allow for the weights of certain mega cap securities to be closer in line with the benchmark is what allows for actually what could be portfolios that are going to be closer to the benchmark, even in those high number of metric scenarios. So that was the big motivation. And as Teresa mentioned, right now your workflow is not going to change. It just actually what will happen is it'll just reduce the back and forth and make a lot of things easier on your side without really changing the way that you go through things. So I'll pull up a quick example of my favorite demo prospect Spud webinar for these webinar portfolios. So I went ahead and entered in some example personal details, just like you would normally do, same workflow. First name, last name, email, account, the registration, the custodian, and you can always add multiple if you'd like. As we move on to the next section, the value section, I'll just highlight one more time that the easiest way to be able to get the VADIS questionnaire responses is by just clicking Launch Behavioral Values Questionnaire from inside the VADIS workflow, or copying this link to the questionnaire. The questions are going to be the same, just the mapping of the question responses to the metrics don't map to those difficult metrics. So again, that allows you to have more of the metrics that align with your client's values, while still keeping the portfolio composition within bands that are closer aligned with the benchmark. So here, if we click Launch Behavioral Values Questionnaire, we can go through it with a client right from here, or we can just copy this link, send this to a prospect, and then as soon as that's completed, you get an email notification and the results pop up in here. So the values, I went ahead and took this in advance as an example just to save time, because I think most people are familiar with the questionnaire. You can see that this Spud webinar is a planet protector and a health defender. You can click in to see which metrics are included in these value sets. And as always, you can click fine tune here. This is where you see that metric meter. And then as we add or remove, you can see the metric meter go up or down as we add in or remove particular metrics. Here again, you can also add the specific exclusions or inclusions, which I put 2 examples at the bottom. Next, just as normal, you're able to select your risk preference. I selected moderate. And there's, as always, the mapping between the Orion Risk Intelligence questionnaire and the benchmark that you can select. Just click that info icon here to be able to do your selection. Or if you know what your client's looking for, you can just select it here. And then finally, we have this review step. Now, this Optimize in Advisor Core is something that currently does not show up on your accounts. This is actually something that the First Affirmative team will see. So you still click Submit Portfolio, and then they can click Optimize in Advisor Core, and that will take all of your preferences and then allow them to click this Compute VADIS Portfolio, which will take your values preferences, your specific inclusions and exclusions, your risk preference, and then use the new optimization capability to compute that portfolio. This is something that we are anticipating adding pretty soon to your accounts, which will reduce back and forth even further, because you'll be able to directly click that Optimize in Advisor Core button, and then you'll be able to run the optimization. It takes between 10 and 15 minutes, and then see directly in the Advisor Core report what the values analytics look like, what all of the risk and returns analytics look like. Everything that you need, you'll be able to see in 10 to 15 minutes. And that will allow you, you'll also see warning messages if particular factors get triggered, and you'll be able to make tweaks as well if you'd like. And then First Affirmative will still have the ultimate fiduciary review, but it will allow you to do much quicker iterations and tweaks if you need it, and get that immediate feedback to reduce a lot of that back and forth. So we're really excited to be rolling that out soon. But for now, again, you'll click Submit. The First Affirmative team will be able to click Optimize, and it's still, even just with that, really speeds up the First Affirmative team's process to be able to get back to you quicker too. Because this does take 10 to 15 minutes, what I did was I actually did a little pre-baked casserole where I did click that compute button already, and we can see that there's this optimized portfolio with Apex, the amount, the registration is in there. And what I did was click to run analysis as well. It's going to automatically populate the moderate benchmark as well based on the risk level that I selected. So the first thing that we can do actually is click on the portfolio optimization tab, where we're able to actually download the holdings and see the tracking error. And we can click through all the holdings individually here, and we can see all of the analytics on the new advisor core capability that YourStake has. So what we can do is click on the risk section and then see the client risk score that came from that questionnaire or your benchmark selection, and see that that optimized portfolio is well aligned with the client risk score. We can see the values alignment, and we can see that actually on both of these areas that were selected were super high aligned, and then the overall alignment is a combination of these two, really high, where the benchmark is exactly at 50%. It's right in the middle. It's the benchmark. It's the median. And then to get to the YourStake values report, you can just click this launch full values report button, and then it'll load up. I'll be able to show that a little later. We then have the equity sector breakdown, asset class breakdown, trailing returns, volatility, fees, market cap breakdown. And actually, I realized that this Zoom might be getting in the way. So fees, market cap breakdown, holdings concentration breakdown, geography breakdown. And then for accounts that are not equity only, you're able to get fixed income type and fixed income duration as well. For all of these metrics, we can click in, for example, on large cap, and we're able to see which of the holdings in the portfolio are included in all of these categories. So that's a big upgrade, as well as additional transparency on any of the metrics that we want to look at, to be able to see what our utilities exposure is or whatever it might be. And the last thing is I'll just briefly show the values report looks fantastic on all the metrics that were selected. So that's not changing as a result of the new process. The other thing that I wanted to briefly cover, because we've gotten a couple questions on this, is the ability to add in management and advisory fees. So on this fees section, you can see by default, it's just doing the expense ratio from the funds of the portfolio as well as the funds of the benchmark. This is a combination of ACWI and AG. And what we can do is we can add advisory or management fees to both the optimized portfolio and to the benchmark. So if this is something that it's a client coming over from another advisor, maybe you can add in the other advisor's fees, and then you can put in yours as well. And then you can put in the 36 basis point management fee, and then you're able to update the chart to be able to see what fees will look like over time from both. So I know that was a requested question. The last piece that's really cool is we can go to this export presentation, and this is something that the First Affirmative team has already been sending over to a number of advisors more recently, where you can just generate this PowerPoint presentation, and it will have your branding on it. This is our sample branding. Your disclosures, you can add in custom disclosures here, and then all of the sections that you want to include in that presentation. A really cool thing as well is you can decide which, if you don't want to have a conversation focused on returns, you can decide to include or not include it as part of the PowerPoint presentation export. So again, for now, just to summarize, you're still going through that same workflow, but this new optimization process for the non-taxable accounts or for the small value taxable accounts is going to speed up the turnaround time, going to really help with the close alignment to the benchmark on geography and market cap, allow for positions that are going to be closer in size to the benchmark weights. You'll still click submit portfolio, and the First Affirmative team will be able to turn things around, including that advisor core report. You will also be able to, the First Affirmative team will be able to click a button to add the optimized portfolio to your account. So you don't need to do any uploads or anything like that to be able to then run this type of analytics report on your own account as well. So that was a huge mouthful. I saw that there's a little notification of two things in the chat. So maybe now's a good time to pause for questions, or I'll turn it back to Teresa. I'm happy to go through anything else in more detail as well.
Yeah, the
So,
question in the chat is, how do adding individual security exclusions affect the metric meter?
I can cover that one. Right now, it doesn't impact the metric meter, but as we're adding in those additional warning messages, those will be factored in and be able to give you more clarity on how they will impact things. Great question though, James.
are there other questions on the VADIS workflow or the new reports, or how you would access them once you're given access to those reports in your stake account? Because one of the things you'll be able to do with this is, and I think this is a really terrific feature, is we always deliver the reports, formerly the Morningstar report and the YourStake values report, using the benchmark as the point of comparison. Advisor Core allows you to easily load a client portfolio into your account and then compare the optimized portfolio directly to the client's original portfolio. And that can be a really powerful comparison, especially if you are comparing a VADIS optimized portfolio to, an ETF or a mutual fund or a mutual fund model. So it's a very powerful tool, and I think it will help you a lot as you go through and talk to your clients.
Teresa, do you want me to show that part? I think that's a perfect segue. I was gonna wait for some questions first, but I'll show that now too.
Well, let me just answer. I think I just saw a question come across. But of course, I can't see the questions.
It comes from Krista, says, will advisors still receive the Morningstar report?
So our intention is not to deliver the Morningstar report, but instead to deliver the Advisor Core portfolio analysis. The information in both reports is very, very similar. It's just presented differently. So if you'd like us to do a sort of side-by-side comparison of the two, Krista, I would be happy to do that for you. But the information in these reports, we went back and forth a lot on what should be included in that portfolio analysis. And of course, the YourStake team got a lot of input from the from other advisors on this. So it does include a lot of information.
So then the follow-up question there is, can the YourStake Advisor Core Holdings report be updated to include the company name and not just the ticker?
So on the core holdings list, it does include the company name. On those click-throughs, we have the ticker, but that's a fantastic feature suggestion. So I know there's a couple other YourStake people on the call here. We'll add that on our notes to add that in. Yeah, that's an easy one.
Then another follow-up question says, does the Advisor Core report performance by ticker?
So that's a coming soon click through. So you'll be able to click on the returns bar graph and be able to see the whichever bar you click on, 1, 3, 5, 10, you'll be able to see the tickers and what their individual contributions are.
Okay. And then just as a compliment, Steve Siegel says, love it. I almost makes me wish I was building a practice instead of being retired from it.
Well, Steve, let's here's one more for you. So I'll pull up the screen share again. And what I've done is I've taken this optimized portfolio for Spud Webinar and I loaded that into the comparison section, have the same risk level and the same values. And what we can do is actually upload a prospect's existing portfolio for comparison. So you can always upload a CSV. This isn't anything new, but a very cool new feature of Advisor Core is clicking Upload PDF. We can go to our sample statements, and I'll upload, for example, account statement 1. And what I can do is pull that up so you guys can all see what that looks like. So account statement 1, this is actually a sample TD statement, but it works with any custodian. And it will be able to pull in the name, the symbol, the quantity, the market value. Actually, this particular sample redacted information statement doesn't have cost basis listed, but if cost basis were listed on the statement, that's something that would also be exported off of the PDF and into a downloadable spreadsheet and analyzable portfolio. So actually, that was really quick. Usually takes about a minute. Sometimes it's faster. And what we can do is download the holdings from that account statement, and we're able to see all the symbol, name, quantity, cost basis. Again, blank, but it would show up if that were there. Market value, expense ratio of the funds, security type, and the account. If there were multiple accounts, you'd see multiple line items for those different accounts. And then what we can do is also click Run Analysis. And now what it's going to do is analyze the client's current portfolio compared to this optimized portfolio that was created. And then the analytics, instead of just comparing the optimized portfolio to a benchmark, you can compare it to the client's existing portfolio or the prospect's existing portfolio, which we found to be a really, really helpful proposal tool and really illustrates to the client all the value that you're providing. Saw that a question came in. Maybe I can.
Yeah, it says to make it easier to search the uploaded statements and Advisor Core analysis, can we delete previously uploaded statements?
Yes, you can do that in the people and portfolios section. You just click Edit next to the portfolio, and then there's a delete button at the top. Okay, cool. So now the analytics came through, and now we can see that the client risk score is much more aligned with optimized portfolio than their existing statement. And then you can just compare the sector breakdowns and asset class breakdowns. See that there's a ton of cash in the existing account statement, sample statement. You can see that it's a much better breakdown for the client in the proposed portfolio. Anyway, it's all the same. You just are comparing the two portfolios instead of optimized versus benchmark as an option.
Gabe, does this also compare the values?
Yeah. So here we can launch full values report. And on this one, actually, sometimes what can be really helpful for when you have a client's existing portfolio is you can do comparison absolute or comparison relative, either works. But here you're able to show them that they have 0.4% tobacco exposure and you're tobacco free in your proposed portfolio. And then you can click in to be able to show where that tobacco exposure is coming from within that existing portfolio, and what the holdings that they have that are contributing. So MWIMX is the biggest contributor with 1.3% exposure. But yeah, you can click on any of these bars to show the client where the issues are and where things might be better.
But you can also see just how much better the optimized portfolio looks relative to the existing portfolio from a values perspective. Well, and obviously from other perspectives as well.
Right, yeah, that's the comparison relative report that has these bars.
Okay, are there other questions or other things that you would like Gabe to cover? Okay, seeing none and knowing that he is always available for many of us to follow up with, I am going to share my screen again, and I'm going to turn over to Caitlin to talk about proxy voting and advocacy. So, Caitlin.
Thanks, Teresa. If you can go to the next slide. So in March, As You Sow held their annual proxy preview, and there's some key takeaways I wanted to share with everyone. There's been 527 resolution filed on ESG issues. That's very similar to last year's numbers. And even though proposals favoring corporate responsibility still outnumber anti-ESG efforts significantly. And then SEC policy shift. The SEC policy shift in late 2021 led to fewer omitted proposals, but challenges to exclude proposals have surged back to previous levels in 2024. Trends that we're seeing this year, there's been an increase in inquiries into AI usage and biodiversity protection. Environmental issues still remain prominent, while reproductive right proposals have decreased. And then as far as a regulatory update, the SEC's climate disclosure rule disappointed shareholders, and further amendments to shareholder proposal rules are stalled. Next slide, please. All right, so I do have a couple exciting updates on our proposals. The first one I'll talk about briefly is Kroger. I actually just got an email in my inbox with the signed withdrawal agreement, so we'll be able to talk a little bit about that in the coming weeks. And then with Union Pacific, we did successfully reach a withdrawal agreement in April, and that was addressing the sick leave policies. They've committed to publicly disclosing their sick leave policies. And most importantly, there are no penalties for employees taking sick time.
Hey, Caitlin, do you want to just talk a minute about what the Kroger withdrawal was related to?
Sure. So with Kroger, it was an interesting one because for those of you that know what's going on with Kroger, they're kind of in the midst of a merger with Albertsons. So this negotiation took a lot of back and forth, and we're going to continue the engagement probably for years to come at this point. But our ultimate goal with Kroger was all climate related. So we wanted them to set some GHG emission targets, specifically on purchased goods and services. So we did reach an agreement on both of those categories, and we can share those more, like I said, in the coming weeks. And yep, next slide, please.
Sorry.
As far as our Q1 engagements go, we committed to 3 sign-on letters in total. The first one was ending financing for Cancer Alley, and this was sent to 7 major banks. We called for these banks to cut financial ties with Foremost. And the other letter was to McDonald's and Wendy's concerning child labor laws. These letters advocated for strengthening oversight of human rights through their systems. And we've sent a few letters to McDonald's before, so it's kind of amazing that we continue to see these come through, and every time they do, we choose to sign on. And as far as campaigns go, we reaffirmed our commitment to the non-disclosure campaign. We've participated in this for several years now. And this involves collaborating with capital market signatories to engage with companies that have failed to disclose crucial information through climate change, forest, and/or water security questionnaires. And then the one that I think is really exciting, well, they're all exciting, but this one's new. We've also joined the Collective Impact Coalition for Ethical Artificial Intelligence. This is in collaboration with the World Benchmarking Alliance and Boston Common Asset Management. This coalition targets over 200 companies and will be directly engaging with Apple in the coming months. Oh, sorry, Teresa, I should have had you go to the next slide.
Oh, okay.
Oh, no, we're at the right place. And then,
sorry.
oh, no, the next one's good. Yep.
Okay.
All right, and then just a reminder for everyone, I will be out at some point in July through October on maternity leave, and I'll share with everyone when the time comes And if you have any questions before then, please feel free to reach out.
Okay, thank you, Caitlin. And, I think we're doing some really exciting things in the proxy voting and advocacy space. I hope that you're sharing all of these things with your clients and prospects. We're among the few advisors / asset managers that are truly voting proxies in alignment with your clients' desires. Our proxy guidelines are posted. The advocacy efforts, I mean, some of these things are pretty amazing, especially the Kroger situation. Just take a look at some of the stuff that Caitlin has been publishing.
We have a question. It says, how are the proposals to be filed determined?
So usually we start with engaging with the company, and then a proposal is used as a tool for leverage, to get a company to agree to usually do more. So
Caitlin, I think the bigger picture is, what's your research into what's going on and how we decide where we're going to work?
yeah, so we're a part of many different groups. We're a part of a lot of the working groups at Ceres. And then we decide which companies we're focusing on based on our assets in those companies. Because to file a proposal, you do have to have a client with a holding for at least 3 years at $2,500. So the amount that we hold in the company, affects the companies that we look at.
Super. And you just got a best wishes, congrats from
Thank you.
Fair Planet. Yeah.
Okay, at this point, I will turn over to Kathy to cover some compliance issues or rules. Kathy?
Okay, this is just an update on the new fiduciary rule that the DOL put out. What they're trying to do is include other people that give advice into the definition of fiduciary. So for now, what's going on with the fiduciary rule that's in place now is it only affects investment advisors. And Rule BI, or best interest, is the one that covers broker dealers. What this new rule will cover is investment advisors, broker dealers, insurance agents, and anyone who is giving advice as a trusted person. So it really expands the definition of who's covered by this DOL rule. Now, it has been released as a final rule, which means it's going to go into effect. And it's already got its first legal challenge in a federal court by the American Society of Pension Professionals and Actuaries. So there's not a lot of data from that yet, but it is out there. So the first part of the rule is going into effect on September 23rd. And that's the part of the rule where trusted advisors have to, they don't have to state that they are fiduciaries necessarily, but they have to make sure and say that they put their client's interest ahead of their own always. And one thing that's different from the existing rule is a one-time recommendation, like a registered rep would give, is considered investment advice. And so they are fiduciaries under the one investment recommendation. Then on September 23rd of 2025, the rest of the rule will be put in place. And this is this is the part that affects the prohibited transaction exemption. This is the one where you have to prove that it's in the client's best interest to make this recommendation. I did a cursory review of that section. The rule itself is like 430 pages, so I haven't managed to get through the whole thing. But it's just an expansion of the requirements. So at this point, nothing is really changing for what investment advisors are required to do. And I haven't seen any legislation that removes or pauses any of the current requirements. So watch for new information coming out closer to September. And that's all I have.
Okay. Well, since we only have 5 minutes left, I am not going to start the market and economic review and outlook because we won't get through it. Please take a look at our quarterly economic review, our quarterly market review. We are going to be resending that with some phenomenal formatting adjustments that the YourStake team has made. So we're going to be resending the market commentary out. I think, the most important thing to note is that, obviously the markets were up very strongly in the first quarter. We've given some of that back. The market performance remained extremely concentrated in the first quarter, becoming even more narrow than it was previously, where the Magnificent Seven sort of morphed into the Fab Four, as people have been calling them. And, Tesla, Apple fell out of favor, but there was less concentration in the market, but the increase in the former Magnificent Seven, which was 13% despite a 29% decline in Tesla, far outpaced the rise in the broader market, which was only 6%. So the market was up 10.6%. The Magnificent Seven were up 13%, and the rest of the market was up 6%. And reflecting that narrow market, sustainability themed strategies continued to underperform, although less than they had. Going forward, you may or may not remember from our market update earlier this year, we do not anticipate multiple interest rate cuts in 2024. The reason for that is real interest rates, remain well below where they should be. I have a favorite chart that you can see in the economic commentary that shows the massive gap between real and nominal interest rates. Until that gap closes, I do not believe we're going to see an interest rate cut. I know the Fed is looking at all sorts of data that's coming at them. I called this market commentary, don't react, anticipate. I anticipate that we will see higher for longer interest rates. It's in line with what we were talking about in the first, earlier in the year during our fourth quarter review. And that suggests that the market is pretty fairly valued at these levels, and we're going to see some volatility going forward. So unless there are other questions, and since I can't see the questions, I would like to thank you all for joining us. I hope you are all excited as we are about the updates we've made to the VADIS process. It has truly been a pleasure to continue to work with the YourStake team on all of these updates, and we look forward to sharing the new reports and the new functionality with all of you. So if you have any questions, please let either us or the YourStake team know. We will get back to you as quickly as we can. And everybody have a great day, and let us know if you need any additional information. Thank you.
Thank you.
Thanks. Bye-bye.
Take care, everybody.
Thank you, George. Thank you, Teresa. Thanks, Gabe, Kathy, and Caitlin.
Thank you.